Hi folks, welcome to another episode of Investment Income for Life. The recent stock market rally has brought life back to real estate investment trusts. Today, let's take a closer look at Keppel Data Centre REIT. Let's call it KDC for short. KDC just released a remarkable first half FY 2025 results, with distribution income surging 57.2% year-on-year and delivering a super impressive 12.8% growth in distribution per unit, aka DPU, of 5.133 cents. Annualize this and the current yield will be 4.43% per annum based on the 2 Singapore dollars and 32 cents per unit as at the 25th of July 2025. Market price of KDC has rallied 5.9% within 2 short weeks, as many investors were awed by the spectacular results from KDC. Still, there may be a few potential downsides that retail investors need to be mindful on, especially for those who suddenly find KDC full of prospects and want to ride the data center AI wave. 1. Investing in KDC is not the typical REIT for income but a growth stock. If we look back at the announced acquisition of the Singapore data centers by KDC in November 2024, it is already clear that DPU will increase by around 8%. Also, the newly acquired Singapore data centers have very short tenure of 25 years, and I thought that even with a 4.31% distribution yield, the current market price of KDC seems very much overvalued if we benchmark to the current risk-free government bonds. The distribution yield of 4.31% is thus still extremely low, as unit holders need to prepare to plow back capital into KDC at the end of 25 years for additional extension. The only possible explanation here is that many investors are treating KDC as a growth stock. 2. Overhanging issue at Guangdong data centers. There has been no news suggesting that the tenant, Blue Sea Data Development, has resumed rental payments or that it has settled its arrears. So question remains whether its Guangdong data centers are now white elephants. The only reference I found was the AGM minutes on the 15th of May 2025, which only mentioned that 100% quarterly allowances has been made to zero-rise income contributions from Guangdong DCs. Also, KDC management are adopting investment assets at fair value for its accounting treatment based on independent valuation reports. So, in event that the situation worsen, investors may have to repay loans relating to those China investments at a loss, which will hit future distributions. Parting thoughts and personal thoughts: I am not sure whether one should keep chasing and accumulating KDC at its current sky-high market valuation. Its market price is currently 2 Singapore dollars and 32 cents per unit as at the 25th of July 2025, while its NTA is only 1 Singapore dollar and 53 cents per unit as at the 31st of December 2024, and this means that one is paying a jaw-dropping premium of plus 51.2% over its NTA. It may just be a better idea to sit on one's idle cash instead of chasing KDC after the recent round of rally. Nevertheless, if I want to increase my investments into REITs with data centers exposure, I will probably choose Mapletree Industrial Trust followed by KDC rather than Digicore REIT or the recently listed NTT Data Center REIT. Okay folks, that's all for today's sharing. Have a great week ahead and may you all be well and happy always.